चमन में इखलाते रंगबू से बात बनती है. हम ही हम हैं तो क्या हम हैं, तुम ही तुम हो तो क्या तुम हो. So on that note, the push and pull between the retailers and the developers is a never-ending story. But today we're here to, of course, celebrate the retail in the country and how resilient we can take it from here and how do we build on the resilience is what we're going to talk about. So good evening, ladies and gentlemen. My name is Rehan, and I have a very wonderful panel here in which we're going to discuss some very interesting and controversial topics as well. And let's start with, so we're going to cover about 6 topics, which we are going to now concise it to basically 3. And the most favorite one for me is what we're going to begin with is about dispute resolution. So when we talk about dispute resolution, the solution is either arbitration or we are talking about going to court. But let's take a step back and let's try and analyze that in the given dynamics of the market and the experience about 2 decades of retail that we have had in the past, what kind of problems that we are encountering now, what kind of challenges are we facing now, and how do we build ourselves in the years to come in terms of the retailers guarding their own issues and developers safeguarding their own issues. So in this dispute resolution, of course, there are multiple issues that can be covered, but in the interest of time, we will look at 3, and we will go by the rule of 3. So the first one, which before we get into the details, I just want to quickly narrate a small story of a developer and a retailer, and you please try and understand how the dynamics of the retailer and in this particular case study, and how the retailer can control his side and how the developer can control his side. So the story is that a developer leases a space, a prominent space in the mall, to a leading entrepreneur slash restaurateur. And the restaurateur gets into the agreement because he has got a pedigree of experience and he has established himself, his name in the market. And in 3 months to 6 months into the operations, the developer discovers that the person who the developer has leased the space to has shoved it off or sold a certain percentage, and now he's reduced to a 5% operating stake. And there are about 3 or 4 investors now that the developer has to deal with. Now, of course, there are, when an investor is involved and there is certain percentage of return that is spoken about, and obviously in a growing market, sometimes those returns are very difficult to achieve in the first few 3, 4 months or 6 months. Eventually, it leads to the rentals not coming to the developer on time. So now there is a conflict between the retailer and the developer. Both of them are sitting across the table. And the retailer are asking, where is my money? And the developer is asking, where is my money? So now in this context of this small case, it is very essential to understand that who are the stakeholders that we are dealing with and what kind of issues can crop up. So my first question with this little case, and if something that Salim can talk about, I'm going to start with you, sir.
Sure.
Is there any case that you can refer to in this context, or any experience that you've had in this context, and what are the steps that you're taking in terms of how you want to safeguard your interest?
Yeah, thank you, Ram. Very interesting question, and I think everybody sitting here, at least from the mall side, have experienced something like this. I mean, whether it was sorted out mutually or through litigation. But the problem is, before we discuss about what is a dispute resolution, I think we need to understand where this comes from. Yeah, when you have 2 parties engaged in an agreement, the dispute comes in when either of the parties or both the parties do not honor the essence of the agreement. I think when you sign the agreement, it is important that we honor the essence of the agreement.
Correct.
You cannot expect a party A to make his business unviable to make your business viable. Yeah? Everybody involved in the business is there to make money. Yeah? And it is always important that the partnership is a both-way traffic. To answer your question, whether we've come across this situation or not, we've come across these situations on and off. I think the number of malls that we manage, we come across this situation very often. Most of the time, the dispute is resolved when we talk to each other. The conversations resolve a lot of disputes and litigations. And at some point in time, when the other party has nothing to lose, yeah, this gets into a litigation, and it's a long process. I think it's a hurting process for both the parties, especially for the developer, because until the dispute is resolved, your inventory goes for a stop. Yeah, so I think we've all come across this situation where we've gotten into a litigation because we could not solve it mutually, and then the store or the restaurant or a food court counter, whatever you want to call it, it goes for a toss because the business is not happening from that premise. And end of the day, nobody wins. You end up spending a lot on litigations and compromises, but nothing comes out of it.
So I think what you're saying is in terms of the agility of the developer, in terms of if a person, or if a brand is occupying a certain space, and again I keep repeating this in many other forums as well, where I say that the qualification of a retailer to occupy a space, is his propensity to generate business and not his ability to pay rent. And that is where I think the conflict starts, that if you're occupying a space where you're not generating a certain throughput which is expected out of you.
Correct.
And therefore, in terms of staying relevant, the developer has to take some dire straits in which there is a certain conversation of an exit, which leads to a certain dispute, is what you're trying to hint, is it?
Absolutely. So if what you said is true for all the performing malls. Nobody's signing a brand because they're paying you heavy MGs. That is not the intent. I think the rent or the revenue share that we earn is the byproduct of what offering we have in the mall. What is more important here is the brand needs to understand that the trading intensity clause or the minimum guarantee clause was in the agreement in the first place, because it was always a performance-driven game. It was never rent or MG. If the brand could afford to pay the MG or rent to the mall, I don't think any good mall in the country is looking only for MG. So yeah, what you said was right. It is about propensity to generate business and not how much rent they can pay.
So I think a key takeaway here, I think very well said, Salim, that we were talking about two things. The first was the case study that we spoke about, in which there is a dispute and with the party, and of course most developers or the entire fraternity has moved to very evolved contracts. So I don't think there is a contract issue. The contracts have evolved quite a bit, and obviously there is a black and white situation that is already there. But having said that, the judicial system also in India is such that, even if you're knocking on the court, if you have an arbitration that you have to pursue, the selection of an arbitration becomes a 1-year exercise.
Yeah, minimum.
Okay, and then you're talking about a stay on the unit for till there is a resolution on the entire program, which can stretch to 2 years to 3 years.
Absolutely.
Now in the current dynamics where you have, probably a net operating income which you have, or certain private equity that you've committed certain numbers to, these blackout period can be detrimental if it goes to court. So therefore, most developers per se, and I would say most, especially the bigger ones who have a very stiff budgets or a net operating income challenge sitting on their head, they would not like to go to court.
I agree with you, because after this 4 years, 5 years of process with the court, the end outcome is compromise.
So I think what we as developers, I think what we have started doing, and it's become a little longer exercise in terms of siphoning of the brands that you're picking up. So essentially it starts that, we deep dive into the structure of the company, the paid up capital. We talk about personal guarantees. We talk about escrow accounts.
Due diligence is
we're trying to, what else can once you've handed over possession, then per se you can't really do much except for safeguarding yourself with this. So I think we'll wind this one up here, because I think from the due diligence point of view and from the strength of the agreement that you're signing with, is something which is the only resort left with the developer in terms of when you're going. You do your due diligence, take a little more time
Yeah.
in getting your due diligence in order and try getting into people who are a little more stable with their business.
Correct.
And I think if you're going with new faces or new entrants, and I think then maybe the solution at your hand would be that you go deeper with your personal guarantees and it goes beyond your, just the company or the paid up capital, and then you're safeguarded in a certain way.
Correct.
And now arbitration can also be now surpassed, and you can directly knock on the court, and that's also one option that I think most developers are
In
also
some
picking
states,
up. Yeah.
yes. In some states, you can't go directly.
So moving on to another very important topic in the current day and age, and I think most of the developers sitting here will also resonate with what I'm trying to say, is the online sales and the movement of stock, which is knocking on every developer's mind at this point of time.
Correct.
I would ask Ashish to pick this one up.
Yes,
In terms of, the question is that, are you encountering any kind of issue, and what do you see? Because I feel personally that I think this is going to be a major conflict topic in some time to come.
It is
Your
it is
thoughts,
one of
please.
the hottest topic for us. In fact, not only retailers, in fact, restaurateurs have also started asking for a discounted revenue share when they ask, they have to pay to the aggregators. You deduct that revenue share, that the amount that you pay to the aggregators, and charge that from us. So not only retailers, of course, for omni-channel thing, for online delivery, what we are seeing is brands are asking for a lesser revenue share from us, while I don't want my mall to be a delivery center for the brands. I want them to perform on the best potential and cater to my primary catchment who are coming to the mall, not the person who's sitting at the home and delivering it. You can do it from the distribution channel, not from our mall. But let's say if you're doing it, you pay whatever cost that you're paying to me as a MG in terms of revenue share as well. So I don't want to discount the revenue share while there's a question of inward outward also when we talk to them about how much is the ingress from the stock level is there out, whether you in terms of delivery are you doing the same number or not, they don't have the answer to that. There's few brands who have really well adapted to this situation, but not all.
True, I kind of agree with you. And Salim, you want to say something?
Yeah, I think what I agree with him is if you're using my mall as a fulfillment center, if you're using it my store as a storage, might as well get the revenue share. That's what we deserve, right?
Yeah, absolutely. So, see, I think it can be bifurcated into two. So, when you're talking about the restaurateurs, they also have a challenge at hand. So, it's a double-edged sword. One side, they are increasing the delivery, and of course, the revenue is going to increase on that side as well, because they're going to have a significant amount which is going in deliveries. But the percentage is going to go low, much lower, because a very large share of the pie is going to the consolidators as well.
Yeah.
The delivery partner that you will have.
But Rehan, if you look at it, we have discovered problems and we have invented the solutions to them. I think the rev share and all that bit is agreed upon. We know what is the outflow. If it is agreed upon, then might as well honor the.
So I think we are also in that stage. We are discovering the issues as we move around.
Yeah,
So
and
and
we're
most
finding also.
of the agreements which have there signed in the past. So I'll come to Indranil quickly on this. He's got to leave he's got a flight too. So let's quickly pick on his brain in terms of what his opinion is on the delivery partners percentage going off the basically the kitty of the developers.
So this issue we have been facing post-COVID majorly, because pre-COVID the delivery percentage was very less. As far as malls are concerned, the delivery percentage was very less, there maybe about 5%, which we never bothered before. Right?
Welcome,
Now
Mani.
post-COVID, obviously with the delivery percentage shooting up, wherein in malls also we experience about 25 to 30% of sales going in online deliveries. So there where the pain point comes in, right? So that's the reason why we ask malls for a differential revenue share. Because at the end of the day, as you know, e-commerce business doesn't work without discounts, right? So whenever you open an app, you would see a 20, 30, 40 or buy one, get one always there, right? Plus, there are about 500 restaurants. So to be on the top 20, you have to pay a marketing fee also to them, right? So giving all this commission plus the marketing fee and everything, it becomes very difficult to have the same revenue share.
No, that we understand, and most of the developers are anyway succumbing to it. So, ladies and gentlemen, a warm welcome to Manik Dodi.
Thank you.
And welcome to the panel, Mr.
I was
Manik.
told I have to make a running entry. I didn't realize the warm-up took longer.
If TK, welcome. At least you
Just,
will make it.
I feel a little balanced with Indranil and Manik being late. I was feeling a little under pressure being just the band representation. It looks like I was only listening to the mall language.
No, we'll come to your side. Don't worry about that. And we'll adequately cover it. And Manik is here to anchor you. Then don't worry about
Say
that.
this,
So Manik, I'll
most
just
of the
bring you up to
developers
speed.
have understood this and they've been supporting us, right? And I'm sure this
We are
will
doing
get.
that. We are accepting that. because
Just hold on a minute. I'll just bring Manik up to speed so that he can just consolidate his thoughts. And so we're talking about, we started with dispute resolution. Dispute resolution obviously means we're going to court. So to quickly sum it up, what we're discussing is why are we getting into disputes and what kind of reasons we can anticipate that we can get into dispute. One was the due diligence and more to the restaurateur's part that we have already dealt with. What we are discussing currently is the online percentage, which is increasing. So amount of stock movement going out of brick and mortar stores is increasingly going up. And this is showing in all the audits that most of the developers are doing. Now, having said that, there is the developers are essentially feeling the heat that are the stores getting into dark stores or a percentage of the stores getting into a dark store. While on the restaurateur side and the F&B side, there is a percentage which is being, clipped off because there is a delivery partner and the delivery partner is charging about 30%. So the same revenue share can't be offered to the developer. Hence, if the normal delivery percentage would be say about a 12% or 13%, then we talk about between a 5 to 8%. That kind of a shaving that the revenue has to undertake. So that's where we are. You take a moment and please consolidate your thought because we're going to come to you next after we hear Preeti in terms of why are the stores, what are the challenges at your end and how do you safeguard the developers from, the store not turning dark? And obviously there are a lot of conflict in that because those movement of stock from the store is not getting accounted in the revenue share per se. So Preeti, your thought on this?
So, see, to be very honest, what I feel, I'll say it in a very crisp way, that whatever is sold through a store is certainly integrated to the POS. The only disconnect or discrepancy which happens is when the returns. So for example, I'm selling X units this month. If I give a ref on particular month on that particular units. However, the returns which happen through my partners, that somewhere, is something that we are also working on. And probably that's the only gray area which we feel as an intent or capacity, which probably gets into a little dispute. But otherwise, we feel that, there's no...
No, I'll add to that one quick one, and you can let me know what you think. Some retailers are recognizing the sale once the delivery is complete. Now, while the money is clocked and the delivery has moved, because of the high return rates as well. So sometimes you've paid, the stock has moved out of the store, but not accepted. And then there is a suspense account in which the revenue which has been clocked for the month is including that sales or not including that sales.
So that is what I'm saying. So as a retailer, we would want that conciliations to happen in the following month. But as a developer, the expectation is that we reconcile the same month. So hence the discrepancy happens.
Sure. Manik, your thought.
So gladly, we do not have, as a brand, we don't have the same situation because though there are certain brands that I use for my shopping and they have pickup from store, and to save time, I do that myself. Fortunately for us, in case if you buy from Maridas online, it will be delivered at the address that you've given. So in our case, we are not giving pickup from the store. However, in certain stores, especially the Coco stores, if you do not get your choice of product in the store, we assist you from the same store in checking in that which store has the same thing available. So that's something that we are doing. In that case, you would be diverted to a different store because you'll see the availability. And we do that if through the conversation, there's an option given. But if the customer insists that, or if it's a regular customer for that particular store, which in a lot of places are, then the same customer will prefer, and it's our responsibility to give him the option that these many days, this is when we could have a refill of the stock, and we can offer you the same place. And in such, and most of the customers agree to that. So we call them up, they come to the same store, or we bill through the same store, and they pay online or something. And then it is delivered to them. But fortunately, we are not the culprits here. At the same time, we are struggling with the storage space that we have in most of the malls. We need bigger space. And I can't afford to pay rental to have that space as a storage in your malls. I mean, I see some faces smiling. No? You're the only one smiling, that's why. So we do have dark stores. We are trying to make, and in fact, we are building some dark stores particularly. We are also building some stores in certain high streets where we can afford the rental. And we take extra space in those locations, and we build them as dark stores.
So, ladies and gentlemen, we don't have a ready answer for this question as yet because it's an evolving problem, and as and when we, as we are growing as a trade, I think we'll encounter some more problems, and then let's see how it goes from here. But it's just the discussion is so that everybody is wary of the problem, and it's just a flag that in times to come, it's food for thought for everyone that omni-channel and online sales and stock movement from the malls is going to be the biggest problem between a retailer and the developer. Anyways, moving on. So the next topic that we quickly will touch upon is data analytics and lease negotiations and how we are working on innovative lease and financial modeling. I would like to go to Nikhil for this and start with him and take a balanced view as the chief mediator in the panel as well.
Hi, everyone. So when we talk about data analytics, there are two ways. One is the developer side.
Sorry, I'm just barging in. There are two sides. So developer side of data analysis and retailer side of data analysis. And data is flowing through the nose now. Everyone has got tremendous amount of data, some relevant, some irrelevant, but data is playing a very important role in the negotiations. What kind of problems are you encountering in designing the commercials and the leases now?
Yeah, so I think data plays like an ace of spades nowadays. And many times it has happened, my deal has dropped because the data is not supporting. The rental which has been asked by the developer versus the sales is not matching at all. And on the flip side, I've also seen brands coming forward and asking for the space because the data is supporting and they're okay to open the stores over there. So yes, data plays a big role, and there are many agencies out these days which is helping developers and their malls to figure out those places where they can open the stores, where the sale is supporting, the rental is supporting. Yeah, data is a big thing, and one definitely need to work upon that as well.
Okay, let's take a quick 1 minute each, and how do you use data, Indranil? Let's start from Indranil. And how are you using data, and what kind of problems are you facing in terms of structuring your deals now, and any innovative deal that you have struck?
As far as issues are concerned, I would say yes, we look at data, and we get it from competitors as well, right? And it becomes a little difficult when it is compared with MNC brands, right? So obviously, when we start comparing the commercials and the rates with the MNC brands, then obviously, there is a differentiation in rate, which is the most difficult thing that we face currently.
Where do you fetch these data from, and what are the sources that you generally look at? And do you also anticipate in times to come will this data be fed to you for free?
There are people who can help you with the data. Like there are mediums, there are companies who actually provide you with the data. There are colleagues in your department wherein they can help with data. So there's, authenticity of the data, you cannot say 100% it is true, but yes, we obviously try to get as close as
Any innovative
possible.
structure of a lease that you have struck which is drastically different from what has been in practice over these years? Like somebody paying you fit out, or giving you a loan, or giving you pure revenue share percentage and getting into a rolling MG. These are all done and dusted. But anything further than this, next step, paying you to being in the mall.
So CAPEX payment is one, right? So we get those kind of things as
I think
well.
we are on the cusp of where the developers will have to pay the retailers to be in the mall. Agree, don't agree?
Paying to make the outlets at least.
Okay, we'll leave it at that. Preeti, your thought.
So benchmarking, rentals is one part which Indranil has already touched. Not that we've succeeded, but another aspect of data usage could be like, for example, we've all traveled to revenue shares and we've all done stagger deals, which is, a rental year 1, year 2, year 3. Probably a little, if we deep dive onto the data with regards to the sale, so there are leaner months, there are, months which are really very well. There is traffic, which is, certain months is high traffic, for example, holidays, kids' holidays and all that stuff. So in case we could do a slide-up rental, wherein, probably there could be some rental or a revenue which is different on those particular months or period, or probably different on the higher times, and averages same on an annual basis for a retailer and a developer. That's something maybe that, we can ideally, take a step ahead and start looking at.
Manik? Before we go to the developers.
I think I'll break it down to high street and mall developers separately. It's the conversations are different, and the model also should be different. Especially in last couple of years, what we've observed, the malls that have opened in last couple of years in a lot of cities have not performed the way any of us expected, even the developer. The flip side of that is the rentals are negotiated and malls don't easily give rent discounts. So while the upside of malls is taken care of with a revenue share, but in case where the footfalls have struggled or the mall did not open the way whether the mall or us expected, it becomes a difficult conversation, and it's not a very comfortable situation when either of us has to go and ask developer for rent discount. So I think that's the only thing that I have observed, and that's again particularly because the malls have not opened the way they expected. High streets have been a different story. In smaller cities, there are a lot of developers who offer to support us in capex. It purely depends upon the brand power or the negotiation. But I also get jittery at times because the more a desperate a developer is to fund us in capex, I actually get worried. If you really, it does, and there have been cases wherein there are two developers competing with each other in smaller cities, and one of them offered us 100% capex. And as much as my team was excited, I'd put a foot down that if you're confident about your product, you don't need to support me so much.
So what are the two things that you specifically ask in your lease, which you think is important for you to safeguard your interest?
First year rental, and at the same time, the percentage of, we all know what are the brands that are signed. So a clarity on the occupancy percentage with which the mall will be opening, and what is the, time frame in which different brands are opening, which also includes the hypermarkets, which also means it's not just a percentage. The zoning has to be defined clearly, and the brand in different zones have to open, together. So I think that's the most important thing for me. And it helps, it should help everybody. If it's only one zone which is opening in a stronger manner, it doesn't help the property.
Fair enough. I think you would need that feeder in terms of that you're able to generate that amount of business which you're paying, and you're well within your rent revenue ratios, so that you are not bleeding at any point of time.
Absolutely, and not just my brand, not just my category. It goes the same for everyone, because a new location or any location for that matter will only flourish if every brand in every category is growing. If not everybody is growing, it's not going to give us the result that we want.
Okay, so let's hear the other side, the fair side.
So when we look at the data, I think when I look at my BI, we look at the performance. We're keeping our footfall and spend and TD aside. When we look at the data, we look at how the category is performing, how the retail brand mix is performing, and what is the brand looking like in each state. For example, let's say a brand, X brand in North, how is it doing? How is it doing in Bombay and Maharashtra? How is it doing in South, for that matter? And if there is an alarm that goes up saying, what, this brand has degrown over all the states, all the areas, that you have to be prepared for a vacancy and a churn. You don't get panic when you look at the numbers dropping and then coming back in shape, because that happens with a lot of brands. They go through a rough patch. But if the drop is consistent, then you can't be waiting for the brand to come back to you and tell you that, you know what, I can't afford and need to move out. I think that's where you start working on your backup. And that is the intelligence. That is the most important intelligence today for the malls, to cut down the vacancies and keep the mall up and running. Yeah.
So I am a developer for 20 years now, and I think I wear it on my sleeve. So please pardon me if I'm a little skewed with my opinions. But I kind of completely agree with what you're saying. So what Salim is trying to say is that the brand has to be relevant at all times. So like a mall has to be relevant at all times, the brand also has to be relevant and justify the location that you're occupying. And obviously there are various parameters now which have come into play, including spend per footfall, spend in the store, average APCs, trading densities. So these are the new currency, not rent. So these are the new currencies which have come into play, and all the developers are now looking at and closely monitoring what is their currency, which is their trading density in the mall and spend in the mall. Ashish, your thought?
Yeah, I mean, the simplest data which a developer asks the brand is, with what trade density you're performing at the, similar performing centers. For a mall which is a decade old, running successfully, of course, structuring a deal is very easy. I mean, you see number of, variations in terms of deal structuring in the new mall. New mall coming in a metro city is a different thing. New mall coming in a non-metro city is a different thing. So the simplest data is, how you're performing, elsewhere, and of course, which category for me in my mall working well. I may have a, in terms of MG per square feet, I think a mall like Tego Garden, we have from lower ground to first floor, all my per square feet rental are almost same. My rentals are, flow neutral now. So a mall which is running successfully can, command that. But a mall which is performing, I mean, we are doing a fresh lease. Of course, you have to structure a deal in terms of wherein there are few brands who may ask you for a loan also, wherein they'll repay in due course of from 6 months to 3 years. You have to structure a deal according to that. Of course, when brand knows that, as a developer, the thing is that you don't invest in the capex, and of course, the new thing that has come up is the loan, in way of loan that they ask the amount.
Good, I think we are running a little short of time, so we just about winding up now. So I've been ticked off another 5 minutes to just quickly wind up. But I want to wind up on a sweeter note. So despite all the disputes that we have, and it will continue to be there in our lives, and we will eventually find innovative ways to deal with them too. So on a closing note, 1 minute each, quickly, or half a minute, less than a minute, your thought in terms of how the relationship between a developer and a retailer will get more resilient and better. So what is your closing thought on the relationship?
I think for me, most important thing would be to be transparent with each other. Very important. If me as a retailer, I know what are my margins and what is the bare minimum profitability I have to have if I have to expand. We have our own global practice, and similarly, every brand knows. The margins would be different for international brands as compared to local, athleisure as compared to others. So I think for me, the only way out is transparency between us as retailers and the landlords, and then come to an amicable solution. I think over smartness is not going to be there for a longer time. And that's what a lot of us have struggled in the past. Nothing else, I think. And at the same time, please don't buy land at higher prices so that you can charge us lesser rentals. That was in your favor, by the way.
We wish.
Ryan, for me, I think partnership is the new leadership.
Yes.
Yeah. Having said that, the partnership is a two-way traffic.
Yes.
If the malls don't perform, the retailers come and tell you, you know what, this is not making sense for me. I'm serving my notice period. I move out 6 months from now. We also need that flexibility. If the brand is not performing, we win enough. We push to the brand, and sometimes it doesn't work.
Certainly.
It is always better that both of us understand that if each of us
Yes.
is in the business to make money, right? I have to run a viable business, you have to run a viable business. If there is no light at the end of the tunnel, I think it's best that we part ways in a very mutual manner. When we are back, we come back to the relationship. But in the meanwhile, I think the best thing is to not get into dispute and respect each other's area.
Thanks. Thank you. Thanks.
Yeah, I
Ali.
mean, the best way is to be transparent and, of course, have a cordial relationship with your associates in the industry. Of course, the best solution to resolve any dispute is sit across the table and resolve it instead of going to the legal. Of course, it will it will give you impact on your non-operational that unit. So better save that and discuss it internally. Whatever we have to do, just resolve it then and there.
Good thought.
When it is business, business is supposed to have ups and downs. And I have been doing the dispute resolution from 20 years now. Only thing which I have seen is sit across the table because end of the day, you guys have to keep working. This is small industry, retailers and developers, and we keep dealing with each other from a very long time. So the only thing is to sit down, and I've been doing this from a very long time. And I've seen that happening. Brands going out to legal or developers going out to legal, it's not giving any solution at all. I've been doing this from long time.
So I think the developers and retailers is something like the intent of marriage. And I think in this platform itself, we've celebrated Swayambar a couple of years back. So I think with the right intent, the only important factor today is flexibility and agility. I think which we've seen, COVID has also taught us. We've crossed that path a bit, and I think there's a little more road to go. So whatever internal, external factors sometimes changes, we just need to be a little flexible and adaptable to that. It's what I feel.
The format for us works the best in malls, right? So what we feel that it's a relationship. We are binded by an agreement for sure, but yes, at times wherein a format is not working, maybe in one of your centers or so, so we should be, open enough to help each other and get into an amicable solution rather than getting into a dispute or a legal.
So the Indian retail can safely be concluded is no less than a blockbuster Hindi movie with all kind of shades, action, drama, emotions, everything. So that's it, folks. That's my time, and that's our time. And I would like you to please put a big round of applause for the panelists here.